Hi, I'm Darcy Crow, Senior Wealth Advisor and Portfolio Manager with CG Wealth Management. Today, our webinar topic is Investing for Income with Blackstone Private Credit. In a market of increased market volatility, rising interest rates, and heightened inflation, we have many investors looking for products that can deliver steady income. With that, we are thrilled to share that Blackstone is entering the Canadian private wealth market with their private credit fund, also known as BCRED. This is providing Canadian investors access to one of the world's preeminent credit platforms. BCRED is powered by the insights of Blackstone, the world's largest alternative asset manager with over $1 trillion in assets under management and an investment track record spanning 37 years. In this webinar today, we will define private markets, explain why investors allocate to private assets, and finally, why Blackstone Private Credit. So to start, what exactly are private markets? Private markets is really an umbrella term for a range of investments not traded on public exchanges. These investments are bought or sold in private transactions and considered private market assets. Private assets are also considered alternative investments, given that they fall outside of traditional investments such as stocks, bonds, and cash. So there are three core private asset classes, which include private equity, private real estate, and private credit. So first, private equity can provide access to companies ranging from startups to large private companies. Second, private credit, which is going to be our focus of today's webinar, may consist of directly originated loans by non-bank lenders. They typically consist of senior secured, floating rate loans, which can help investors adjust to higher interest rates. And we're going to dive further into private credit in just a few moments. And third, you have your private real estate. And this provides access to real estate properties ranging anything from warehouses to apartments, which can help investors pursue income and capital gain potentials while also hedging inflation. So we know that individuals are typically underallocated to alternatives compared to institutional investors. A study by the Thinking Ahead Institute noted that while large institutional investors such as endowments and pensions have alternative exposure of 57% and 23% respectively, on average, individual investors have less than 5% allocation to alternative assets, and in many cases that we see, no exposure at all. So why do investors, and particularly these large institutional investors, allocate to private markets? It really comes down to protection of wealth and long-term performance. First off, public markets have grown more volatile over time. If we look at the number of daily swings greater than 3% in the S&P 500, in the 1960s, this was 9 times per year, whereas in 2020 to 2022, this was 39 times per year. This increased volatility in public markets has caused investors to become wary of their investments. We also know that equity and bond correlation was positive in 62% of the past 50 calendar years. So we are not seeing the diversification benefits through a portfolio of just stocks and bonds. We have also seen demonstrated that incorporating a 30% private market allocation into a portfolio with a balance consisting of equities and fixed income can drive higher returns and reduced volatility. Bloomberg reported that results from 2018 to 2022, where a 60-40 traditional portfolio would have returned 6% annualized return with 13.3% volatility. Incorporating a 30% private markets would have resulted in an increased annualized return of 8.2% with reduced volatility of 11%. The yield on that portfolio was also increased slightly as well. So to summarize, private markets represent a significant investable universe which is becoming more accessible to individual private wealth investors. They can be used to enhance traditional portfolios in all environments, including those markets that can be challenging for public market assets. So now I'd like to discuss private credit in greater detail and specifically the Blackstone private credit portfolio. Private credit can offer companies a more direct and efficient way to access capital. Private credit managers raise money from investors and lend to corporate borrowers. Private credit has been expanding rapidly in recent years, in part due to bank consolidation and regulatory challenges. This trend has been largely driven by private equity activity and companies seeking more flexible capital solutions. Private credit has provided low historical volatility and strong relative returns, which this chart displays over a 15-year period versus other fixed income products. However, selecting the right manager is critical in ensuring the right outcome with key attributes that include scale, staying power, and a long track record of success. Blackstone is the largest global alternative asset manager with a 37-year track record. Blackstone Credit was established in 2005, has a long track record of success, and deep sector knowledge with proprietary information and data. There are $291 billion in assets under management within the credit platform alone, and 300 investment professionals globally. BCRED seeks to capitalize on private credit opportunities, predominantly direct lending through first lien senior secured loans to U.S. companies. These senior secured debt instruments sit at the top of the capital structure. The portfolio is comprised of 97% senior secured debt, 98% floating rate to capitalize on increasing interest rates, and the average issuer has EBITDA of $200 million and a conservative loan-to-value ratio of 42%. The portfolio seeks to offer protection from inflation by focusing on large, performing companies in sectors that exhibit high growth trends, strong cash flow profiles, and low capital expenditure requirements. Top industries include software, professional services, healthcare providers and services, insurance, and IT services. And finally, let's have a look at the performance of BCRED in context of current market. BCRED provides monthly distributions with an impressive current yield of 10.5%. The one-year return on the portfolio is 10%, and the annualized inception to date is 9.5%. In closing, individual investors have a significant underallocation to private assets. These private assets have been shown to increase returns and decrease volatility when incorporated into a traditional portfolio. Blackstone is referring to this as a golden moment in private credit investing, with increased demand and increased yields on the back of higher interest rates. And we now have access for Canadian investors to the world's preeminent alternative asset manager with $1 trillion in assets under management and a 37-year track record of success. We are incredibly excited to bring this opportunity to our clients and share this information for those investors who are seeking yield and stability in this market. Please do note that each investor will have a unique investment goal, liquidity requirements, and time horizon. I would welcome the opportunity to discuss with you specifically if Blackstone private credit or other private credit strategies are an attractive opportunity for you to add to your portfolio. Thank you for joining us today. Please take a moment to like this video and subscribe to our channel if you found the information useful. It helps us get this information into the hands of those that need it most. Thank you.